All right, so good evening, everybody, and a big welcome to you all. All right, I know that for many of us, we've gone through the video. You've learned from Dr. Bill's status. You've seen, live trades again and again from news releases. All right, but the one we're going to be using for the purpose of our examples today, all right, which is why we're doing it today, which is a Friday, which is a Saturday, all right, is because just yesterday was the release of the news. All right, the news was just yesterday, the NFP. All right, and a lot of people were confused about the news for the NFP. All right, but today I'm going to be trying to demystify what exactly happened yesterday. Okay, why you shouldn't have been buying as at yesterday. Okay, it's going to be simple, I promise you guys that. All right, and it's also going to be lively and entertaining. So without further ado, let us get right into it. Okay, so for those of you who are just coming across me for the first time, my name is Adetola Freeman, aka the FX Templar. Okay, so that's my name. I know a lot of you were probably expecting Dr. Bills, but I will be handling tonight's session on his behalf. All right, because I believe that I could explain a couple more things to you guys that would assist you in understanding why that strategy works a lot more than many of you think it does. Okay, I know a lot of you feel like, oh, this strategy, hey, it's so risky. Oh, how do I even know where to put my stop loss? How do I know when to enter? All right, because naturally, Dr. Bills taught us that we enter the trade at the retracement. All right, when you get a retracement, you take the trade. But a lot of people don't know how much a retracement is a retracement. All right, a lot of people don't know, okay, so how do I know that this is a retracement? How do I even know that the retracement has ended? All right, so today that is what I'm going to be trying to show us right now. And we're going to be using the news that came out yesterday, which was the NFP precisely, which was around 130 thereabouts, 130, 230 thereabouts. All right, so like I said, without ado, let's get right into it. So I think the news, this is USD card, all right, and I think the news was released sometime around here. All right, I think the news release was somewhere here. Give me a minute, let me figure that out. Yeah, I think the news release was somewhere here. Okay, now I'm going to go to the lower time frames and show you how you could have easily caught into this move, all right, without risking too much, all right, and at the same time you will still get the same level of accuracy that some of us have been able to get from using that strategy. In fact, yesterday I had a live stream with the firm that I work with, FBS, all right, and right there on the live stream I took the trades live using this same strategy. All right, so I'm going to show you how to use this strategy, and we're going to be going to the 1 minute time frame. All right, we're actually going to be trading this on the 1 minute time frame, and I'm going to show you why in a short while. Okay, now remember the things you're looking for. All right, Dr. Bill said first you get the spike, all right, a big spike that came as a result of the news. All right, then secondly you get the retracement. All right, and then after the retracement, the third thing is that you take your trade based on how much you are willing to risk. All right, based on your level of risk. Those of you that are tapping on the microphone button on your screen, please hold on. I will not be taking questions yet until after I am done with the explanations. All right, so please hold on. So we're going to first of all wait for the spike to take place. All right. Now I have my own personal approach to this. All right, and that's what I'm going to be sharing with you guys because nobody can teach Dr. Bill's strategy better than himself. All right, but I'm going to show you my own adaptation based on how I understand it. Okay, and I'm hoping that you guys will learn a bit from it. So what we're waiting for right now is the spike. All right, that's all we're waiting for. We just want to see that market spike that happened as a result of the news, and I think that was around 2 o'clock thereabouts. Hold on. It was around 1:30 thereabouts. Okay, so all right. So just follow the chart. What we're looking for now is a spike. All right, a spike. So let's see. Good. We've gotten the spike. All right. This is that spike. Now, the interesting thing about the spike is that based on the way I approach the market, all right, trading inducement candles, okay, at this point, we already got an inducement candle, all right. The retracement has already happened and it has created an inducement candle. We're going to scroll back just a little bit, all right. We're going to go back just a little bit and then, yes. Okay. So now based on my my trading approach, okay, I call it inducement candles, all right, based on liquidity. Now we had this inducement candle here, all right, which was also marking the previous low, which means that a break of this candle, all right, a break below this candle is a confirmed break of structure and liquidity grab, all right. So let us take this one step at a time. Okay, and then you're going to see how that spike happens. Okay, the spike has happened, the retracement is happening right now. Okay, so let us see. Now remember I said that this is my order block, which is going to serve as my area of entry. All right, that is going to serve as my area of entry. So I'm literally just waiting for price to come into this area. All right, or worst case scenario, I use the Fibonacci. However, I already got my order block, so it is the most probable point, all right, because we've gotten this break of structure. So it's either price comes back to this other block, all right. Some of you are wondering why I have to mention other block again. Just hold on, you'll find out now. The reason why I'm using other blocks is because it will help you minimize your risk, okay? So that, you know, when you want to trade this strategy, one of the most important things to know is when will the retracement end? All right, at what point is this retracement going to end such that I can now enter the trade? And that's the major problem people have. All right, how do I know when the retracement has ended? And the next question is, how do I know where my take profits should be? All right, how do I know when the retracement has ended and I should be closing my trade? So let's go into this quickly. So this is our order block. Let's see if price taps into it. Oh yeah, this is the other block. This is actually the other block, this green candle. Please hold on. Let me mark this properly. Yep. So this green candle is the order block, all right? And if you check, you see that price has reacted already to this order block, all right? Price has already reacted to that order block. So we are entering the trade from that order block, all right? Right from inside that order block. And if you check it, you see that it will give you a very, very smooth entry. All right, it will give you a very, very smooth entry. Let me zoom out so that you can see that. This candle here, all right, this candle here is our other block. Okay. And then when you look at it, you see that price has come to retest into the other block. All right, price has retested into the other block. So we're literally just waiting for where is our take profit going to be, which is where the question becomes intense. Now, the way I answer this question of take profit is by using the Fibonacci, all right? Because my Fibonacci retracement tool gives me insight into where my take profit should be. Remember, the spike came all the way from here and ended here, all right? Because the spike ended here, I'm going to drop my Fibonacci from the top here to the point where the spike ended, okay? Such that since I am entering from inside this other block, all right, that becomes my area of risk or the level of my risk, all right? And then for my take profit, I am using the other blocks, sorry. I'm going to use these Fibonacci levels, all right, for my targets. So let's see how that goes. So this is going to be my TP1, TP2, TP3, TP4, TP5. All right. And if you look at this, you see that price just steadily declines all the way down to our final take profit, which is about 1:5 risk to reward. All right. It's about 1:5 risk to reward. We're still going to look at a couple more examples, all right, because I'm trying to get you guys to see the practical application of this system, okay, and how some of you can get out of that situation where you are complaining that, oh, you tried trading the strategy, you lost some money. Okay, the only reason why you would lose money with this strategy is if you did not follow instructions. Okay, is if you did not follow instructions. But as long as you follow instructions, you can't go wrong with this strategy. That's one thing I can tell you guys categorically. All right, as long as you follow instructions, you can't go wrong with this strategy. Please mute your mics as you join the meeting. Okay. All right, so can you guys see this is price moving? Let me quicken this a bit because it's looking too slow. All right, let's just see. And then this is our final TP, and you can see that price is almost at our final TP. Now we're going to go back to the 4 hours or the 1 hour time frame, and you will see that all of this movement, all right, is actually going to be inside just one spike on the 4 hours time frame. All right. Let me show you that quickly. This is our final TP. All right, that's our final TP. Let me pause it. All right, let's forward this. All right, so now price has hit our take profits, right? We'll now go back to the 1 hour time frame and check. And I'm going to show you that all of this movement that you just caught, all right, on the 1 hour time frame is not even looking like much yet. All right, as far as the higher time frame is concerned, it doesn't look like a break of structure has already happened. Can you guys see that? For me, based on my own trading approach, I would want to mark this again as another block zone, naturally. All right, but let's play it forward. And you see that price, okay, that's the end of the chart. So what I'm expecting now is that since we've broken structure here already, price is most likely going to come back for this particular order block and then continue dropping. Okay, so this is on USD CAD. Remember I said that we're going to look at how this played out on virtually all the currency pairs that are all the majors. All right, USD JPY, GBP USD, AUD USD. All right, so that you guys can understand how simple this thing is. But what am I saying? Am I saying that, oh, you have to start drawing order blocks, drawing trend lines, drawing support and resistance? No. It's just two major steps that you need. All right. The first step is get your order block. All right. Get your inducement candle rather that was broken by the spike. Okay. Once you get your inducement candle that was broken by the spike, the next thing is where is the order block? All right. Once you find the order block that was responsible for that break of structure, you have cleared everything. All right. Just enter from that order block and you are secure. Okay. So let's look at USD JPY. All right, we'll look at gold. We'll look at gold too. Okay, because I want you guys to understand this strategy like the back of your hands. All right. Okay, this is USD JPY. Let me go use a different chart. Okay, I want to use a clear chart so that you guys can see this much clearer. For my pre-mastery students, they'll remember that we actually marked out AUD USD during our last class, all right, the December batch of the pre-mastery class, because I gave them the setup way before the news came out, all right, using because I was able to analyze it and find my entry using smart money concepts as well. Okay, and that's why I agree that this strategy is actually one of the best out there. All right. So if you've not been able to get a hang of it, don't assume that it's because the strategy does not work. Okay. I can beat my chest and literally bet on it that this works. Okay. I can literally bet on it that this strategy works. Okay. Because I saw the poll and I saw that a few people still said, oh, they traded the strategy and they lost money. That is why we are having this session, to break things down to the very basics, such that even if you're a smart money trader, All right. You will not come here and argue that this strategy is fake. Good. We've gotten our spike. Come on, that's too fast. Now we've gotten our spike. All right. This is the spike. All right. So the next question is, where was structure broken? Where was the inducement broken? Okay. And you see that we have multiple breaks of structure based on this spike. All right. Multiple breaks of structure based on this spike from the 1 minute time frame. All right. So marking our order block now, which is the candle that swept liquidity right before that breakout. All right. I want to mark it like this. Or because of this gap, let me include this tiny gap. Okay. So let's play it forward. Can you guys see? Price just came back into that order block. In fact, it came to the topmost order block, the highest one over here. All right, all the way up here. And after I came into that order block, can you see the movement and the intensity that price moved with? The spike just kept going. All right, such that even if I wanted to take another entry after this movement has occurred, all right, you can still get in on the trade from this retracement. Let me show you quickly. This is the Fibonacci, right, from the top to the point where the inducement candle ended, all right? And we want to know where are our take profits for this trade. Okay, let me zoom this a bit. So our final take profit is down here, all right, minus 1.618, all the way down here. Okay, so let's play it forward and see, does price actually really get to that point? Okay, and what do you see? Price actually got to that point very clearly. All right, so from this this news release, all right, you would have made some really good money. And remember, we also have another inducement candle here that got broken. Can you see that? There's an inducement candle that also got broken. All right, and marking our order block. Let me mark that from the 5 minutes because it should be clearer on the 5 minutes. Okay, marking that on the 5 minutes. That's the order block. So let's play it forward and see. Price should tap into our order block and then continue the movement. Can you guys see? So you see, one of the issues that people have when they start complaining and saying, oh, this strategy, it didn't work for me, all right, I was unable to make money with it. People have such complaints because they don't know where to enter the trade, all right? That is the biggest secret of using of this strategy. That's the biggest secret of this strategy, knowing where to enter, all right, and knowing where to close. It's like any other strategy. You must know, this is my entry criteria. This is where to enter from. This is where to leave the trade. Okay. And the purpose of this training is to show you that if you're a smart money trader, just plot out your order block on the 1 minute time frame. Use that for your entry, and then use the Fibonacci retracement tool for your take profits, and that will clarify every single question that you have. All right. That's going to clarify every single question that you may want to have. Okay, so before I go to other USD pairs or USD commodities, I want to take a couple of questions. All right, so if you have questions, please type in the group. All right, type in the group. I want to see your questions in the group so that your questions can be documented. All right, in the case that we might need to, address it again, so we would have a detailed analysis of this. These are the frequently asked questions about this strategy. All right, I have some of my students on this class right now, on this call right now. I can see Pius, I can see Samdani, I can see Mamba, I can see a whole lot of you guys. It's good to have you guys on this call. So please, if you have a question, just drop it in the chat group. All right, just drop it in the chat box. You can type, you can drop it. Muna, it's good to see you. Puzo, it's good to see you. Yeah, who else is that? Who else is there? Jeremy, it's good to see you too, man. I'm seeing a whole lot of you guys. Please just type your question, all right? Can I show you the settings of my Fibonacci? Well, the settings of my Fibonacci is no secret. All right. It's literally all over my YouTube channel, but nonetheless, I'm going to show you guys so that you see that and you will not come and complain that, oh, the reason why I'm not making money is because that guy that taught us the strategy didn't show us the setup of the Fibonacci. So these are the settings for my Fibonacci. All right. How to locate the order block you don't understand. Well, if you don't know how to locate the order block, I may not be able to explain that one in detail. Please mute your mic. Okay, so I'm seeing your questions and I'm going to address all of your questions tonight. Okay, I'm going to address all of your questions tonight. So I'm seeing the first question, how to locate the order block. All right, you don't understand. Well, as far as the order block location is concerned, all right, when it comes to identifying the order block, there are a lot of approaches. All right, there are different approaches to identifying the order block. All right, SMC has their own approach, ICT has their own approach, but for me, I have my own approach. All right, which I may not be able to explain in detail now. All right, I may not be able to explain it in detail now, but I'm going to try my best to just give you a brief insight, a short insight into it. All right, the students in the pre-mastery group, they were taught that during the course of the week. All right, November, December guys were taught that during the pre-mastery session this week. But I'm going to look into that. All right, can I show you the settings of the Fibonacci? Yes, I just did, and I hope that you've taken the screenshot already. Is there another way to find your entry without the order block? I am afraid no. All right. The reason why we are using the order block, well, if you want to enter without drawing order blocks or anything, yes, you can. Honestly, you can. All right. But if you are looking, if you're considering reducing risk, all right, you want to reduce your risk so that, for example, let me show you something. Let me show you something so that you can get what I'm talking about. Because I really need you guys to get it, especially the person asking about how to do it without drawing the order blocks. Okay. Now, imagine that you saw this first spike. All right. And immediately after you saw the spike, you entered the trade. All right. Let's say you entered the trade from here. Okay. If you had entered the trade from here, if this was where you entered the trade from, the minute you see price going up, you can see that price came all the way to this point here. The minute you see price coming up, honestly and sincerely, you would have closed out of this trade. And you would have closed out of the trade and felt like, oh, this strategy is not working. Shit. My money is going shit. I just lost money. All right. And you will not realize that that's not what's going on. It's just the fact that market is trying to go back into a convenient zone. All right. Take out sufficient liquidity that will enable it to move the way it is supposed to move. All right. That's going to allow it to move in the direction it intends to go. Do you guys get it now? Okay. So that is in order to answer Victor Paul. Jasper Chris, is it only 1 minute time frame that you use to enter? Well, if you are looking to minimize your risk to the uttermost, if you want to minimize risk completely, all right, Mamba, you be my guy now. You know as they do them now. You understand now? That's so it be. So, if you're looking for a means to minimize your risk completely, all right, to a point where you are not stressing yourself, the 1 minute is the best approach. All right. Just mark out your Fibonacci, get your order block, enter, and use your Fibonacci to get your take profit. Because a lot of you will even close too early. Once you see $30, you have closed. Once you see $50, you have closed. All right. And you are using one lot size. If you're going to use one lot size, I expect that you should be closing at like $500, like $800, $1,000. You understand? Because You took a lot of risk, so your reward should also ginger you now. You get? It's like somebody that risked, maybe the king snatch your wife. You now risked going into the king's palace to rescue her. And after you now finish rescuing her, she now says she cannot marry you because you are too short. Like she just looks you in the face and tells you, hey, guy, I really appreciate all you did for me. You are such a very nice friend. In fact, you are like a brother to me. I said, but I cannot marry you because you are too short. Now, will you accept that as a person, as a human being that you are? Will you say, oh, okay, well, God gives and God takes and God gives, I'm alone, we are all slaves of God. That's not what you will say. You will literally almost even slap the lady self. Like, so after I risked my life, you're only concerned about not marrying me because of my height. You get it? So if you are taking a trade with one lot size, you have taken a lot of risk. Are you getting me? So taking a trade with $1 with one lot size and closing at $30, $40, $50 profit. Come on, bro. You are marginalizing yourself. I don't know if you get me. You are marginalizing yourself. Use one lot size. Cash out. Don't invert. Don't trade again to the next NFP. You get what I'm saying? Just relax. The money is there. You are not the one moving the market. It is the big men that are moving the market. You understand? So if you are using that kind of risk, go all out. Go big or go home. I don't know if you guys get me. So you see, that is why I'm showing you this approach. All right. So that you will not get caught up in, if you are looking for the settings of the Fibonacci, you can take a screenshot now. I'm going to explain it to yourself later. The Fibonacci settings is on my screen. You can take a screenshot now. So what I'm saying is, you don't want to be that person who gets to risk so much, all right? And the only thing that the woman you rescued, you risk your life to rescue, the only thing she ends up giving you is a peck on the cheek. She pecks you on the cheek and says, you are so much like a brother to me. I love you like a brother. Thank you so much for rescuing me. What? Police will pack everybody, even the king self included. Everybody. You understand? So guys, please note this. All right. It's really important because I see a lot of you use this strategy. You are using 0.05 lot size. Thank God for Dr. Bills. Dr. Bills is a calm person. He will reply you with stickers. But when I see some of those things, you are using 0.5 lot size. You are closing with $4, $5, $20 profit. Hey, you are carrying yourself to where you do not know. That is what is going on. You are carrying yourself to where you do not know, which is an insult on all the people that are concerned in this matter. All right. So this is why I'm showing you guys this approach right now. Okay. So please and please and please let us learn this thing. Learn it religiously. Put your heart to it. Okay. Put your heart to it, and I can promise you, you're going to make some mad money from this. Okay. I don't want to boast, all right, but as at that yesterday, I know what I made from this trade. All right, I know what I made from this trade. It was over 260 pips that I took off of this trade on gold. Okay, you said it is not clear. Hey, yeah. Let me see how I can help you people. If I now help you people and you do not give me my birthday gift, or my New Year gift, or my Christmas gift, or you do not even clap for me, Olopa will pack everybody again. Let me see. Hold on, guys. I just zoomed in, so I think let's just wait for that to take effect. So I think you guys should be able to see the settings now. And at this point, anybody that does not see the settings should please contact an ophthalmologist.
Please, can you screenshot and send it to the group?
Me, I should screenshot.
Please.
It looks like you people want to download. You want to download this screenshot from seller, because me, I will put it on seller. You'll be using 5K to download it now. Are you joking?
Please help us.
Don't play with me, bro. All right, I've sent it to the group. Please, oh, please mute your mic. So, all
Sorry,
right.
please, can I ask a question?
If it is a brief one, because questions were supposed to be typed in the group, so that we can keep track of the questions that we have answered and the ones we have not yet answered.
Okay, sorry, sir. Please, how do we use this Fibonacci retracement? Like, how do we use it?
My brother, you don't know how to use Fibonacci retracement.
I don't, sir.
How do I
Sorry,
answer this your question? No. See, the easiest answer to that question is join Dr. Bill's Academy. But if I'm going to answer your question in a different way, what I will say is, in order to be able to trade with the Fibonacci, all right, yes, there are videos on this group, all right. Just go through the group media, all right. Go through the group media. You see YouTube links, all right. There are YouTube links here that you can go through that should help you with Fibonacci retracement trading. Okay, so please, I want to beg everybody, kindly mute your mics. All right, some of you, you know that the things you are doing is not righteous, and you are still on muting your mic. It's not good. Okay, all right. So let me see. I don't understand this strategy, especially the order flow. Don't worry, watch the video again. You understand it. Please mute your mic. So, all right. So okay, let's see. If the spike hits a supply or demand, how it's reversing will tell you it's apart from retracement. That question, I don't understand the grammatical. I don't understand the grammatical implications, but let me quickly explain. If it hits a supply or demand zone, remember I said that you are checking for the break of the inducement candle. That inducement candle alone is a strategy on its own. But I'm not here to teach you about inducement candle. All right. But you want that spike to break structure in a particular direction. All right. So it is after it breaks structure in that particular direction that you are waiting for the retest, of the order block. Do you understand? You're literally just waiting for the retest of the order block. You see, if you are waiting for this on the 4 hours, you will already be too late. Because before this spike will become visible on the 1 hour time frame self, price would have gone far. Not to talk of 4 hours time frame. Do you understand? And you are trying to enter this trade sharp, as quickly as possible. All right? So you saying, oh, you are waiting for your 4 hours time frame. Bro, sis, you'd have missed out on the trade already, as the grace of God lives. All right, who else? How can I tell if it's a buy or sell order? That's what I said, though, the break of structure. What direction did the break of structure occur in? For those of you who joined late, you are definitely going to need to watch this video because I explained everything from the beginning. You're definitely going to have to watch this video. Yes, you are actually trading in the direction of the spike. Yes, please. You're trading in the direction of the spike. Victor Paul, is this class recorded? Yes, it is. Julio, is it only 1 minute you can use to enter, or you can use 15 minutes time frame? Bro, by the time you are waiting on the 15 minutes, movements go down happen, price go down come out. You understand? For example, this trade now, let me show you something on this trade. If you take this trade now the way it is, we're talking about nothing less than 1:18 or 1:14 risk to reward ratio. Okay. By the time it hits the total take profit here, that's about 1:14 risk to reward. But if you are going to wait for this on the 15 minutes, bro, you are only going to be getting like 1:3. You don't get, you're only going to be getting like 1:3 or 1:4 max. So if they are telling you between getting 1:14 and 1:3, which one do you prefer? I don't think that there's anybody that is my friend that will say they prefer the one that is 1 ratio. Waiting, then they call up. Do you guys get it? So that's what we're talking about here. How to identify order block. I'm going to try to show you that today. Is there another way to identify it without order block? Yes, there is another way to identify it without order block. What is that way? Use the Fibonacci retracement tool. Enter or put your entry at the 88.2 on the 1 minute time frame. All right. That first initial spike that happens. All right. That initial spike that happens, immediately it has caused a break of structure. All right. Plot your order block, plot your retracement to your Fibonacci tool. All right. The preferred level is the 88.2. So he said something about entry time frame, the best time frame to enter. Of course, that's the 1 minute time frame. I've shown that already. What lot size could we use for a $100 account while trading the news? I would advise you use something between 0.08 and 0.01. All right, 0.08, 0.01. Reason being that if you're entering from this level, all right, the 88.2 level, using such a small stop loss, all right, your risk is going to be like maybe $20 or $30 max. Right, it's going to be like $30 max. But by the time you get your 1:14, all right, you have already reached $30 to make close to about $400 and something dollars, which I think is a very fair bargain. All right, or don't you guys think it's fair? Okay, so let me see. What's the ratio of a news trade turning out well? The ratio, I would say, is 85%. The ratio of a news trade turning out well, based on what I have experienced in my own personal trades, is 85%. How do you tell a retracement apart from a reversal? The answer is simple. A retracement is going to only come back to retest an order block. If your stop loss gets hit, all right, if your stop loss gets hit, then you know that it is no longer a retracement. It is actually a reversal. But I doubt that will happen because remember, this is an high impact news, which means that the money of the banks, all right, the big banks, their money is behind that direction, right? So they also are going to lose if the retracement does not retracement. If it turns out to be a reversal, they are also losing. And you know that they will not want that. So that's what we're talking about. All right, Dr. Perspicacity. Is the session recorded? Yes, please. Got here late. Is it the new strategies explaining? Very much so, sir. Okay. Does it work for 5 minutes time frame? By the time you get it on the 5 minutes, bro, you don't move. You don't move. How many pips stop loss do I use? Well, like I said, you are entering from the Fibonacci level, which is the 88.2. All right, which is the 88.2%. So when you get to the 88.2%, definitely you will see wonders. All right. Sandra, don't worry, you get the recording. The recording will be on YouTube, so you can watch it. Let me see. Anybody who needs the screenshot should send a DM privately. No, sorry, Mr. Felix. I already sent it for free. How about when there are multiple news at the same time and there is positive news and a negative news? NFP and CPI in the same minute. I doubt that. NFP and CPI at the same time is very, 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 very rare. I would almost say it's impossible, but I wouldn't want to say that, but it's very, very rare. And even if that's the case, all right, I'm talking about high impact news. But if that's the case, if the two of them are opposing each other, just go and look for the break of structure. All right, just look for the break of structure. It's as simple as that. Which inducement candle got broken? And in what direction was the break? Yes, the 1 minute time frame works on all high impact news. Yes, please. Yes, please. When is my birthday? It's still very far. It's November 27th. Thank you, Mr. Moses. Thank you. My birthday is 27th of November. Danzi. Yes, it works on all our impact news, at least the ones I've checked. Is the video going to be shared? Yes, definitely. You see it on YouTube. We're still going to look at a few examples. So for those of you who joined late, please relax. We're going to look at examples, please. Gerald of Rivia, you should be watching and protecting us from evil. I don't know why you are learning Forex here. Danzi, you don't ask this question like 6 times and it's still the same answer. What's the most preferred Fibonacci key level for this strategy? 88.2. Please, which skills can one use to stack orders within the quick moves? Because those spikes, they run quick. That is why I am showing you this. You don't need to be stacking orders while the spike is going on. Just wait for the spike to retrace to a point where you are waiting for it. Let it retrace to come and meet you, to tap into your pending order and move. Simple. Everybody is happy. Which pairs should we use the strategy on? I would advise that you use it mostly on USD pairs. GU, EU, AUD USD, NZD USD, and the likes, all right? Because those, the people or the volume of money that is involved in trading USD pairs is higher, much higher than the one involved in trading other pairs, all right? And that's why the US market is usually the most volatile market session, all right? How many pips stop loss do you use? That is dependent on the Fibonacci. You are entering from the 88.2 Fibonacci level, so your stop loss should be above level 100. Let me see. Victor Paul, why are you repeating the same question? That's quite annoying. Please stop doing that. It's really irritating. That's spamming, in case you don't know. And professional people get hungry at things like that. The YouTube name, just search for Adetola Freeman, you'll find it. Just search for my name, Adetola Freeman, you'll find it. Let me see. Which pairs should we use to trade on it? That's what I just explained. Mostly commodities that have the dollar, okay? Can a newbie trade this? Very much so. But for a newbie, the approach for a newbie will just be plot your Fibonacci, enter from the 88.2, finish. All right? Which means that if the retracement does not get to the 88.2, just leave that one. It has left you behind. Don't force it. Because you might force it and then the market movement reverses completely. Okay? So I'm just saying that to assist you. Okay? Most times on the 1 minute, it will get all the way back. It will pull back. So can we take a look at some other examples, please? Can we look at other examples, please? I think we should do that. I think I've answered enough questions for today. So let's take a look at some other important examples. You can see this particular USD JPY trade now. Let me show you. This USD JPY trade right now is about 280 pips. All right, 280 pips is a lot of money. Okay, it's a lot of money. So trust me, this strategy is going to save you for a lifetime. Okay, it's really going to save you. But without further ado, let's go into some other commodities. Let's look at Euro USD. It's still the same thing, all right? I just want to show you the modalities on each of these commodities, okay? Of course, there's liquidity. Of course, there's liquidity. Let me go to where the market actually began, the news. Okay, let's go to the 1 minute time frame. So what we are looking for is an inducement candle that gets broken, all right, with structure alongside. Okay, so let's just follow it. So once the spike breaks an inducement candle, all right, or breaks structure, okay, we're literally just going to enter from the order block that occurred right before that inducement candle. Yes, high impact news, majorly, please. Don't go and use this for low impact news, please. Only high impact news. So the spike is about to happen. 1, 2, go. Let's see. Good. So do you guys see the spike? This is the spike. You can see how large this spike is. Using my normal SMC strategy, we probably would have gotten stopped out of this. But let us see. So here we have our entire order block. but I think I prefer to work with this because that overall one is a bit big. So what I'm going to wait for now is I'm going to wait for price to break out of this other block, all right, break above this week, all right, and then come back for a retest. Somebody saying, oh, it's not going to retest. I say, lie, it's gone. It's not going to retest. Let's wait and see. So we've broken above this zone, all right. Let's see if price retests the other block. Okay, and here we go. So can you guys see that? I don't know if you guys can see that too, but this is it. All right, you see price tapped into the other block. Okay, and there and then the movement began. You can see the spike. Okay, and you can also corroborate this with the Fibonacci level that, like I told you about, all right, the 88.2 Fibonacci level. This was the latest movement, all right, after the break of the inducement candle. Okay, so let us see. Remember I said we use the Fibonacci to decipher where our take profit will be, which is this point all the way up here, all right. Lower time frame does not have noise during news. You will hardly find noise. And in fact, what you call noise on the lower time frame actually makes a lot of sense when you understand how the market moves. All right, when you understand how the market moves, you realize that lower time frame does not make noise. It's only confused most times, but it doesn't make noise. Even on the lower time frame, because our people, our elders will say that, what's that now? Little drops of water makes the mighty ocean. So whatever is going to happen on the higher time frame, it usually begins from the lower time frame. Okay, so that's why the lower time frame sometimes can be confusing, because it is trying to stand in the gap and be the bridge between several higher time frames. So you can see this is our overall take profit getting touched here and now. Okay, so if you're taking this trade, you'd have also gotten another 1:14 risk to reward, clean and clear. Okay, sorry. And that was not even where the market or the movement ended. You're talking about technical analysis. Well, even without news, technical analysis wise, I trade the 1 minute, I trade the 3 minutes, I trade the 5 minutes time frames. Okay, so it's not new to me. And that's why I can tell you that it's not noise. Okay, the things that you see on the 1 minute, 3 minutes, 5 minutes, it's not noise. It's an intentional movement that price is making. Okay, so I hope you guys have seen this particular example as well, and I hope it has made some sense to you guys. Okay, does any other person have questions they would still like to ask? I'm going to take a couple more questions, all right, and then I think we can wrap it up for tonight, because there should be another class by 8 o'clock, which is the psychology class, all right, and I don't want you guys to miss it. So we're just going to take one more question. Just one more question. Felicia Ndubisi, are you by any means related to Emmanuel Ndubisi, I think? Exactly, that's the point. You don't necessarily need to check the news. Let me show you why. Because you see, on Friday, many people came to check the news and they saw that, oh, non-farm was positive, unemployment rate was positive, only this one, average hourly earnings, was negative. All right. So when they saw all of this like this, they said, definitely, this is 2 against 1. So an NFP is positive. So dollar is going to be stronger. So they started selling gold, started selling USD, started selling AUD USD, Euro USD. They were selling all of them. But unfortunately for the selling Dions, all right, those who were trying to sell, all right, the Dons that were selling, unfortunately for them, they didn't understand that whatever this is saying still has to be confirmed on the actual chart, because that's how you will know which direction the investors, the major market investors, you need to know which direction they are heading. All right. And that's what's important. So even though this looked misleading, all right, it was on the actual chart that we got to see the real truth. Okay, so that is why I am taking my time to explain this. One last one on GBP USD. Okay, oh, you people shall want to see one last one. Okay, now, even if it is just to clear my conscience, we will look at it. And note, on my platform, for some of my students, I gave them the signals that GBP USD and the likes were going to buy. Right, so they naturally knew what to expect from the market. So it didn't catch them by surprise. That movement didn't catch them by surprise. But a lot of people got caught by surprise because they didn't know how to address it. Okay, so let's do this quickly. 1 minute time frame. Like I said, you don't want to use a time frame that is going to carry you too far away from the question. What other block do we use? The one before the spike or after the spike? Well, literally you use the first, the topmost one, all right? But in the situation where what you're looking for is a break of the inducement candle. So the other block before the break of the inducement candle is the one you're most likely concerned with. Mostly concerned with. Please mute your mics. Please mute your mics. I've said that so much tonight. All right, so let's see the spike. Let's see the spike. The spike should be happening anytime from now. Good. Using natural SMC levels, we probably would have been able to get in on this one. All right, but beyond SMC, let's look at this. This is the new inducement candle based on this week. All right, you can see how crazy the weeks are. All right, so that becomes our inducement candle. Okay, and then now we have formed an order block. All right, and we're just waiting for price to break above the inducement candle so that we get our entry into this trade. Okay. Let's see. So we're waiting for price to break above this box that I marked, all right? This box, because once it breaks above it, price is most likely going to come back for a retest into this box, all right? And that's what we want to use for our entry. So let's play this. So this is the breakout, all right? This is the breakout. We've broken above the inducement candle. All right, and now we're just waiting for the retest. Remember, this is on the 1 minute time frame, so no matter how big the zone appears, all right, it's still going to be very small in real life terms. Okay. Yes, beautiful. You can see we came back into the other block, and this is the push. Okay, so how do I know where to take profit? That is where the Fibonacci levels come in. Right, the Fibonacci levels will help me know at what point I should be looking at closing my trade, which is going to be somewhere around here, all right, which is the final level of my Fibonacci tool. Okay, so let's just play that forward a bit. And that is it, TP it. All right, nice and clean. So do you guys see it now? This exact same thing played out on gold, NZD USD, GBP USD, Euro USD, AUD USD, NZD USD. This exact same thing. Inducement candle got broken. Price came back to retest the other block before the break of the inducement, and then price springs.
So
Somebody's typing. Let me see.
Okay. Boss, can you take it again, please?
There's another class right now. That's why I'm trying to just speed up. There's another class. But please, just watch the videos, I think. Please just watch the videos. It's going to help you. Please watch the videos. Please, please. I don't want to eat into the time for another tutor, okay? another tutor is going to be having a session now, right? And I think Doctor is going to be sharing the link. Okay, so guys, just Google my name, all right? Just Google search my name. You're going to see all of the stuff. What time does the inducement candle comes in? It comes in immediately after the news is released, all right? Sometimes it comes before the news is released, all right? The inducement candle that gets broken. But the important thing is look for the inducement candle, all right? Look for the inducement candle. So for those of you who are asking what's the name of the YouTube channel, it's simple. Just Google search my name. All right, you're going to see it. My name is Adetola Freeman. Google search it. You get my YouTube channel. All right. So I want to say a big thank you to you guys for joining in on this call. Okay. A lot of you don't know me. A lot of you probably don't even have any idea who I am. All right. But please just practice this. All right. And I can literally promise you that you will not be disappointed. Okay. I can literally promise you that. All right. So thank you so much, guys. So much. So when next I come your way again, all right, I want to say big God bless you. Have a fantastic and profitable trading session, trading week, trading month. God bless you guys. All right. Bye-bye.